Okay, thank you for tuning in to another edition of the Vulcan Report. I figured I'd do a quick video here showing you, documenting where the Plunge Protection Team appears to be coming into the market now. They really want to keep the Dow above the 10,000 mark. I wanted to show you the market manipulation in full effect so you can get an idea and gauge for yourself what's happening. Alright, as you see here, we have the E-mini SP 500 continuous contract I have up in front of you, and below is the SPY, the S&P 500 ETF. And to this column here, you see your bid and asks and the volume coming in on the E-mini SP, and you can also see the bid and the ask on the NASDAQ level 2. Look at the size of the orders on the spiders, and you see just as quick as these orders come in, these orders appear to disappear. Very interesting, isn't it? The gentleman who did a video like this prior has since taken his video down. I did see the video, and I didn't know he took it down, so I figured I would make one now, and I'll leave mine up until further notice. But you see where we are trading at right now on the spiders at 105.52, and then you see these huge orders down here trying to prop the market up. You got 50,000 shares at 105.44 and another 45,000 at 105.46 right below the market to try to prop it up. Well, that's what's happening. They're trying to keep this from collapsing altogether. Even if the market is able, and they're able to keep it lifted up long enough, that still doesn't save it come the next day. I mean, you have to do this like every day. And the word on the street is that they don't really have that many bullets, if any, left to really prop up these markets, to be honest with you. They can try to slow it down, but they don't have the tools to prop it up. I figured I'll just let you throw that in there and let you know that. Look at the size, though, on the E-mini. Back in the day when the E-mini S&P 500 was really, rocking and rolling in 1999 and 2000, it was not uncommon to see thousands of these trades go off. But now you only see a few hundred at a time on the E-mini S&P 500. That's barely enough to move the market and do anything. Now, when you start seeing 20 and 30,000 orders, then you can actually see the hand at work. But it's not like that anymore. I mean, the E-mini S&P 500 is still the most liquid futures contract in the world, aside from the Eurodollar futures pit. This is the most liquid futures contract in the world. It's traded by everybody and their mother. Banks, institutions, everybody. But then below me here, you see the spider. Now again, you saw the prices that I showed you. See these 50,000, 45,000. You see the different exchanges that are coming on. The large institutions like to try to break their orders up in different exchanges and different dark pools and things like that to mask the behavior. But as you can see here, the bots are working at a slower pace today. I really can't call it. I don't know exactly what it is they're trying to do today, but they're not doing their normal thing. I see propping up, but I don't see the large scale that we normally do. So this could fail. It could be that they're setting it up for the big fall, the big collapse here. This candle here on the E-mini S&P 500, that doesn't signify a bottom. That signifies the beginning of another leg down. Does this candle, hey, here's the proof. Look at this candle here. Look at this candle here. Aren't they the same? What happened? Well, the following day, the market got bid up, right? And then what happened? It proceeded to collapse back down. That's huge. All right, we topped out here at 1098.5, and then in the overnight market, you saw we went down to 1037. So I think that even if they're successful today, that we could see some bidding up in Thursday into even Friday perhaps, but then come Monday next week, we'll get a Black Monday. So I think what they're trying to do is determine exactly in what kind of orderly fashion do they want to allow the market to be the market. Because at some point you have to step back and allow the market to be the market. So I think that's what we're seeing right now. Just right now it's looking just like a retracement off of the overnight movement. You know, we have to test the higher end of the bar. Another way of putting it would be that we're filling in the gap intraday. How the market's gap down in the open is attempting to fill that gap now so that it can boogie on down. And it looks like the S&P 500 wants to test that 1100 mark. It wants to get to that 1100 support. I'm sorry, $1,000 support mark. I'm sorry, $1,000 support mark. So that's another 49-point drop from where we are now. So that's where we're headed on that. Just based on the chart, you can see that the technicals are very weak, and the trend is weak. We're trading below the long-term period moving average right here. So we are now in a sustained, repetitive closes below that downtrend. Okay, and we still have more downside potential to go. So there you have it. I figured I'd do the video. You can see, you know, here's your bids coming in on the E-mini. It's the ask side. Here's your NASDAQ, your level 2 NASDAQ level 2 stuff. You know, your quotes. You can see what's happening here. Here's the share numbers here, and here are the exchanges, and here's the price. I mean, it doesn't take a rocket scientist to see what's happening. I mean, what's happening is what's happening. They're trying to prop it up. They know 10,000 is a psychological level for the Dow, but I don't think they're going to be able to sustain it. There's too much going on. But I'll end the video with this. I want you to think about this. Even if they're able to hold the 10,000 level today, you got to remember, the bond market is on fire. When bonds are on fire, traditionally speaking, those correlations come back into alignment. So we can't have a strong bond and a strong stock market. It doesn't go together. Higher interest rates mean lower stock prices. It's just the way it is. It's business and economics 101. So the longer sustained bond market thing we have going on here, the more pressure for people to get out of equities. Another thing that we're dealing with is that the dollar is under assault. They want to destroy the dollar, so you got to look at all these correlations that are trying to come back into alignment that have been broken down for so long. Also, you can't have the stock market rallying with gold and silver and commodities and have the bond market on fire at the same time. Those correlations do not exist. It's not supposed to be something that happens unless manipulation is involved. Again, I repeat, you can't have gold and silver rallying with bonds rallying along with the US dollar rallying and stocks rallying. Something has to go the opposite direction, and it's looking like the stock market is poised to do just that. So that's all I have to say on that. You look at the ticker tape, and you read the tape, and you tell me what you see. I've already told you what I see, but you tell me what you see. The numbers don't lie, although they can be massaged and made to lie, but the raw numbers in and of themselves don't lie. The operations is what you see. There are a lot of bots right now operating. They're all over the place with the price. Just so you know that. You're looking at it, you see it yourself. The bots are here. So we just have to deal with it. All right? Be encouraged. Take what you can. Give nothing back.